Alright, and here on our news it says Crypto Michael says XRP will break out in the coming days. The prophecy will be fulfilled. Alright? Now, what if I told you that the entire crypto market is walking right into a massive trap and only a few people see it coming? Today, the tension in the XRP community is reaching a boiling point. Social media is absolutely melting down because one of the most accurate charts we've tracked this summer is flashing an urgent alert. We aren't talking about weeks or months anymore. We are talking about days. Legendary technical setup has been building for months is hitting its absolute limit. If you have been holding onto your portfolio, waiting for a definitive sign of life, the clock is ticking down to zero. So let's look closely at the data that has everyone talking on X today. So let's start with our very first question about why is Crypto Michael here warning bears to expect immediate liquidation? The headline that is dominating the feed comes directly from the crypto analyst known as Crypto Michael. He just sent shockwaves through the market by revisiting a bold technical setup he first posted on July 1. He didn't stutter and he didn't leave room for debate. He explicitly stated that XRP will break out in the coming days, boldly declaring that the prophecy will be fulfilled. But he didn't stop there. He issued a direct warning to the short sellers and skeptics. Doubt me and face liquidation. This isn't just standard internet hype. It shows an extreme level of confidence in the underlying structure of the market right now. Now, here's my opinion. As a long-time market observer, I love this kind of raw confidence. But you have to look at the psychology behind it. When the analysts risk their reputation on a specific multi-day timeline, it usually means the underlying chart logic has squeezed all the room out for alternative scenarios. So my take is that the bears have grown far too comfortable shorting the asset over the last few months. They are treating a high explosive setup like a dead asset, which sets up the perfect conditions for a massive short squeeze. If the buying volume spikes even slightly, those short positions will trigger automatically, creating a cascading rocket effect that catches everyone off guard. Now, what happens when a falling wedge reaches its apex? To understand why this prediction is so aggressive, we have to look back at the original setup from early July. At that time, the token was trading tightly around $1.06 level. It was bouncing right along the lower boundary of a massive falling wedge right here, a massive falling wedge formation that has been active on the weekly time frame for several months. Crypto Michael revealed he was heavily accumulating right at the baseline, treating it as the ultimate discount zone. So fast forward to right now. The upper descending resistance line right here and the lower horizontal support line right here are converging into a tight point. The price is literally running out of room to move sideways. It is trapped at the very tip of the structure. Now, here's my opinion. This structure reminds me of a giant pressure valve on a steam engine. You can keep tightening the valve for months, forcing the pressure into a smaller and smaller space, but eventually the metal cannot hold the energy. A falling wedge is historically one of the most reliable bullish continuation patterns in financial history. My perspective is that the current consolidation around $1.06 isn't weakness. It's systemic pressure building up. The fact that the price is refusing to break below the long-term support despite market volatility tells me that buyers are quietly absorbing every single token available. The selling exhaustion is real. Now, will the historic resistance at $1.90 turn back the bulls? If the breakout triggers as expected, the next logical question is where the rally actually slows down. The chart points directly to a major historic level. There is a very clear, heavily tested purple resistance zone waiting between the $1.90 and $2.10 price targets. It's this one. Alright? This specific area isn't random. It acted as the absolute bedrock of support for a long time until the flash crash in early 2025 disrupted the entire market structure. Ever since that crash, the token has been unable to reclaim it. Crypto Michael's technical blueprint features a direct, aggressive white arrow pointing straight from our current accumulation zone all the way up into that $1.90 to $2.10 territory. So in my personal opinion, hitting $1.90 is the true test of this entire market cycle. Reaching it represents a massive double up from the current baseline, which will easily shake out the retail traders who get scared at the first sign of correction. But as a market observer, I think the real magic happens if we flip the resistance zone into new support. That area represents the old ceiling from 2025. Breaking through it means the structural damage from last year's crash is officially repaired, clearing the path for an entirely new macro bull run. Now, how do we identify the exact moment of the technical breakout? Everything right now comes down to a single line on the screen. The descending upper trend line right here is the ultimate gatekeeper. Until the daily and weekly candles close decisively above that specific sloping resistance, the falling wedge remains intact. Crypto Michael is tracking this line hour by hour, maintaining his stance that the technical structure will be vindicated before the month ends. The market is watching for a clear breakout above the trend line to confirm the start of the projected move. Now here's my opinion. Patience is everything at the apex of a pattern. The worst mistake anyone can make is celebrating before the daily candle closes above the trend line. Fake outs happen all the time to trap early buyers. However, my view is that the structural longevity of this specific wedge makes a fake out highly unlikely this time. The market has spent too much time building this foundation. When the real move happens, it won't be a slow crawl. It will likely be a swift, high volume candle that leaves late buyers chasing the price. And finally, here's our overall conclusion. When you look at the entire picture, the stage is set for a historic technical event. We have a highly confident analyst calling for an immediate move, a multi-month falling wedge that has completely run out of room, and a clear primary target at the $1.90 to $2.10 resistance zone. My definitive stance as a market observer is to trust the structural geometry of the chart over the daily emotional noise on social media. The accumulation phase at $1.06 has provided a clear foundation, and the shrinking price action tells us a decision is imminent. So protect your positions, keep your eyes on the upper trend line, and let's see if the prophecy unfolds exactly as predicted. And this finally ends our video. Thank you very much for watching, and see you on the next one, or you might just as well check this next recommended video right here.